why the market crash is fake for buyers. So here's why some analysts and investors consider the current market downturns fake or temporary opportunity. Fake liquidity in leveraged markets have always been heavily supported by borrowed money and fake money. When this leverage is wiped out, prices fall, but if the underlying liquidity remains, the market can recover quickly, making the crash feel more like a temporary correction than a structural collapse. When markets start to fall and go down, a lot of people panic and get out. So like, let's say if you're holding a stock you've been holding a stock for the past, I don't know, let's say 1 year, it's been performing really well. And then next thing you know, something comes out, you got the news going crazy, you got war, anything like that. And then they start to plummet. People start panicking, getting out. Well, the consumer mindset will teach you that it's better to get out, get your money out now. But when you come at it as in an investor mindset, you're thinking, okay, buy the dip, buy more. And what this is saying is that most of the time, whenever the market goes down, it always corrects. Rapid recoveries, recent history like 2023 to 2025 has shown that major dips are often followed by sharp, swift recoveries, leaving panic sellers with regret. Same way that happened in 2019, 2020 with that whole situation. I'm not going to say it, but markets collapsed and all that stuff. But then as people start gaining trust again, markets usually recover. Like back in 2009, a lot of people will recall when, we had that stock market crash. I'm not going to lie, I was pretty young then, but still, it's a perfect example as to why you need to look at a bear market as a buying opportunity to set yourself up for the bull market. So you got the everything bubble thesis. Some argue that the everything bubble, like stocks, real estate, crypto, is bursting, but that's because governments will eventually print more money to stabilize the system. Assets like gold, silver, and Bitcoin may actually be safer in the long run. Then you've also got the institutional dip buying, which is large passive investors like BlackRock, Vanguard, and State Street owning a massive portion of the stock market, which is true, but also creates a floor for prices, reducing the likelihood of a sustained long-term free fall crash. So this is not financial advice, but I would advise for the coming market that we might set in. If it's a bear market, I would be setting myself up or possibly eyeing a good position to enter and to be preparing myself for the next bull market, to say. So appreciate you guys watching. For more content, don't forget to follow, share this video. And if you like this video, please leave a thumbs up. I appreciate it. Love you guys, and I'll see you next video.